The U-turn in U.S. crypto policy has flipped the entire game board. The SEC's crackdown. It failed hard. And now, regulators worldwide are taking notes. We've talked a lot about what this means for the U.S. But America, in the only place where regulation has kept investors sidelined. Today, we're diving into how big moves in Japan and South Korea could send a fresh wave of momentum through the crypto market, and which coins could ride that wave the highest. Welcome back to Crypto Cortex, where we decode crypto chaos and turn it into clear opportunities. Part 1. The U.S. Crypto U-turn and global ripple effects. The U.S. is in the middle of a historic crypto U-turn, and although new legislation isn't finalized yet, the message is crystal clear. Trump loves crypto. Crypto is to be encouraged at all costs. According to research by Coinbase and A Parthenon, more than 80% of U.S. institutional investors plan to increase their allocations to crypto this year. The number one catalyst for this growth, not innovation, not adoption, not even more ETF approvals, it's regulatory clarity. Now, imagine this same story playing out worldwide. Every jurisdiction that brings in clear, sensible regulations opens another floodgate for institutional capital to pour into crypto. Sounds good, right? While we hear plenty about regulation in the US and Europe, today we're turning our eyes toward East Asia, where crypto juggernauts Japan and South Korea are gearing up for regulatory reforms that could be extremely bullish. Part 2. Japan's regulatory evolution. Let's start with Japan. Once a trailblazer for crypto regulation, Japan tightened its rules dramatically after the MT. Gox hack in 2014, where some 800,000 BTC was lost. Japan introduced the world's first comprehensive crypto framework, but after more hacks, the rules became so strict that they started suffocating innovation. One of the biggest casualties, stable coins. Foreign stable coins like USDT and USDC were banned for years. Meanwhile, domestic alternatives struggled under heavy regulation. That's why today, Bitcoin dominates Japanese crypto trading to 77% of volume at Bitflyer, Japan's largest exchange. But there's good news. Since 2023, Japan has slowly started easing its stablecoin restrictions. In March, Financial-Gen SBI, a former SoftBank subsidiary, became the first entity authorized to handle stablecoin transactions. USDC was officially listed on SBI's crypto exchange on March 26, and Circle is working to expand onto other Japanese platforms. Another major problem, taxation. In Japan, crypto gains are taxed as miscellaneous income, at rates as high as 55%, with no ability to deduct losses. Compare that to a 20% tax on stock gains, and you see why Japanese crypto entrepreneurs have been fleeing the country. But there's hope. Japan's ruling Liberal Democratic Party has proposed major crypto tax reforms. Crypto gains taxed at 20%, losses made deductible. Crypto classified under the Financial Instruments and Exchange Act, not the Payment Services Act. If passed, this could trigger a massive revival of Japan's crypto markets. Back in 2021, the CEO of a major Japanese exchange suggested that such a move could unlock 10 to 20 trillion yen for crypto, around 130. Even if that estimate is high, it's clear that a friendlier tax regime would be a huge positive catalyst. However, there's still some uncertainty. In late March, reports suggested that Japan's Financial Services Agency would reclassify crypto under financial products law. But the next day, the FSA denied making any specific decisions. Still, both the ruling party and regulators seem aligned in wanting reform, even if the details aren't finalized yet. Stay tuned. Part 3. International Cooperation, US and Japan. In another interesting development, the Asia WEB3 Alliance Japan sent a letter to US SEC Commissioner Hester Peirce, proposing a joint US-Japan working group on crypto regulation. Their goal, reduce regulatory fragmentation, standardize definitions, like tokenized securities and utility tokens, across jurisdictions. This is important because inconsistent rules across countries make compliance prohibitively expensive, especially for decentralized projects. An international regulatory task force, led by today's pro-crypto SEC, could be a massive step forward. Part 4. South Korea. A mixed bag. Next, we head to South Korea. Since 2017, corporations and institutions have been shut out of Korea's domestic crypto exchanges. Only retail investors could play. But that's changing. South Korea is one of the most crypto-savvy nations on Earth. Over 30% of the population owns crypto. At the end of 2024, South Koreans held about $70 billion worth of crypto. Incredibly, trading volume on Korean crypto exchanges is close to surpassing the volume on the country's entire stock market. Now, corporate and institutional investors are slowly being allowed into crypto, starting with a pilot program launched in February. Here's the catch. Right now, only selling is allowed. Buying, not until the second half of 2025. This means that for the next few months, some selling pressure could come from entities liquidating their seized or dormant crypto holdings. For example, if you've noticed EOS underperforming lately, well, you might have your answer. Still, once buying is allowed, it could unlock a huge wave of new demand, especially for the coins Koreans already love. And speaking of which, if you're wondering which coin could benefit the most, here's a hint. It starts with an X and ends with a P. Yes, XRP. On Upbit, Korea's biggest exchange, XRP accounts for 22% of trading volume, more than BTC, ETH, and Doge combined. So, when Korean institutions start buying in earnest, XRP could be one of the biggest beneficiaries. Part 5. Crypto's global momentum. Beyond Japan and Korea, there's good news everywhere. Thailand approved the use of USDT and USDC on local exchanges. Australia's upcoming elections could finally deliver long-awaited crypto regulation. Argentina's securities regulator finalized new crypto service provider rules, emphasizing transparency and security. Around the world, crypto regulation is finally moving in the right direction. This is a structural shift. The benefits will play out over years, not in the 15-minute candles we stare at on TradingView. The SEC's past war on crypto set the industry back, but lessons have been learned, and clarity is finally starting to take root. Remember, narrative follows price on short time frames, but in the long run, regulatory clarity fuels growth, and prices will catch up, sooner or later. If you want to stay ahead of the curve, check out our latest breakdown of Wall Street's top crypto picks for 2025. It's a must-watch. This is Crypto Cortex, decoding the future of finance, one block at a time. Catch you in the next one.